The first point I want to tackle is this idea of AI, whether we're in an AI bubble. And of course, we won't know the answer until after the fact. But if AI and the excitement around it starts deflating, how much does that cast a pall over everything else that we have going on?
Yeah, the difficulty we have right now is that AI investment was the primary driver of US GDP in Q2. It is the primary driver of all S&P earnings. And as you know very well, 10 companies in the S&P 500 are driving over 40% of the returns. This is incredible concentration. So if a few of these big AI hyperscalers have a bit of a hiccup, we could see a lot of the other market taken down with them. The challenge with any bubble is it's not black and white, as you know very well, Scarlett. There is shades of gray. And that's what we're seeing right now. Every time we get a market earning, if it's great, we think, okay, well, this is just more a narrative that we're in an AI bubble. If it's bad, we think the bubble's starting to burst. So we're going to see this constant swinging over the next couple of quarters every single time we get one of these earnings reports for that reason.
You know, Rebecca, we've been talking a lot about this K-shaped economy, and you say when it comes to people in leadership positions, to executives, they should be leaning into that, right? Like playing into the K-shaped economy. What do you mean by that? What would that look like?
So we've now had several quarters of data and really a couple of years. We are very much into this K-shaped economy. There is a small percentage of customers, 10% of American consumers are driving half of spending. We've been saying this, and we're actually already seeing this happen in the holiday shopping period. Now, this lower income consumer is still spending, right? We had some good data over Black Friday that they're still spending, but it's a different type of spending. It is very value-based. It is very purpose-driven. It is incredibly researched, right? So influencers and AI engines have a role to play, but we're seeing more research and purpose-driven than we have before. And it's now time for companies to say, okay, we're beyond the point that we can do more shrinkflation or one-off promotions or even worse, wait and see. And we're still seeing this reaction from some of the big players. So my guidance is step up and play, right? This lower income consumer wants real innovation. They want value. And it's time for companies to reinvest and think about what does innovation for this economy and for this consumer look like?
So for companies, does that mean the easy answer is to just make a play for the premium consumer?
There's no easy answers in a growth strategy, of course, and we are seeing some go that way. We're definitely seeing a very bifurcated economy and a bifurcated consumer. So if you have an offering for everybody, you essentially have an offering for nobody right now. This is really the time where we want companies to really think about who their ideal consumer is. Now, if it's in the luxury end, this is still a research-driven and purpose-based, but there is a lot more froth in that aspect of the market. So they could lean in there, but then we're leaving out a large proportion of the American consumer that wants innovation, right? They still want to spend, they still want to gift this holiday period. So that is a answer, but I definitely don't think it's the answer.
And as we are about to close out this year and look ahead to 2026, how should executives, Rebecca, be thinking about the new year in terms of expanding payroll, R&D, investing, et cetera, et cetera?
Yeah, the challenge is the macro data is very messy and it's very lagging. Given the government shutdown, we are really lacking that gold standard data we really need to make decisions. And we're going to see this reflected in the Fed meeting next week. Both aspects of their dual mandate are moving in the wrong way, but not so dramatically so, right? Inflation is high, but still within a tolerance level. The job market is cooling, but we're still roughly in that no fire, no hire narrative, though we might start to see some of those fires happening. And a lot of organizations, as CEOs are looking to make their growth strategies for next year, are facing this environment. The challenge that we have is we look at all of these data points to try to get a reading, is it good or bad? And that's not how we should be looking at data as executives. We should be looking at data for insights. What does this data tell me about what my growth insights are and leading on to those? We unfortunately look at uncertainty and tend to frame it as negative or bad. And when things look gray, we assume it's going to be a downturn and start planning that way. That's not the view we should take if we want to perform in this world. It's about seeing uncertainty for what it is, a series of future events which may or may not occur. And whether or not those events are good or bad depends on what that organization is trying to do and how they're set up. So I do think on a macro level, we're going to see a real more lean into an AI investment. Many companies are really just starting to go up the curve there. R&D and innovation are looking a little bit mixed across different sectors, depending on where you're set up right now. So I think we're going to see it next year, and that'll be interesting. We're going to start seeing it coming on through earnings from next summer as well.
So, Rebecca, what is the black swan, or what's the one thing that you really worry about that keeps you up at night that you think executives, would kind of freak out over if it were to happen?
Well, executives freak out over quite a lot of things, but I tend to be a pretty prominent bull and try to reframe everything for what that possible insight would be. There's a couple things that we should be looking for, though. This AI investment bubble right now is very much built on anticipated demand. If we get a few industry leaders, non-tech, come out and make pretty firm statements that they're pulling back from AI investment, that would have real market implications. So, of course, we're looking for that. We're also in an environment of extreme political and geopolitical uncertainty. So any big changes to more trade policy or regulatory policy that really upends industries, that could shake a lot too. So kind of anything in the AI bubble, geopolitical uncertainty, and the extreme policy uncertainty. If we could get a little bit more stability in the political landscape, that would actually do a lot to helping some of the economic uncertainty and the labor market. If you actually dig into the data that we're seeing from the recent job reports, a lot of this is saying, I'm just waiting until I have a bit more certainty coming up. So again, there's lots of things that could happen. Those are the couple things I'm most looking out for.